Bitcoin, a better-known cryptocurrency and arguably the current gold standard for cryptocurrency investments, gained over 1,300% in 2017. More than a dozen other cryptocurrencies outperformed Bitcoin with gains ranging from 3,300% up to Ripple's astounding 36,000% gain. Since then, crypto enthusiasts have been trying to figure out the next Bitcoin or best cryptocurrency to get their hands on. Here are the top 5 secret altcoins. If you're a subscriber, well, welcome back to Investing Few. But if you're new to this channel and you want to enjoy more of our engaging content, make sure to click that subscribe button and use that trigger finger by smashing that like button. Now, let's get into it. Number 5. Cardano, ADA. Cardano is the largest third-generation cryptocurrency, and it's packed with plenty more upside potential in 2021. Cardano offers a platform for dApps and smart contracts on a public blockchain platform. Cardano offers a unique approach to scaling and securing a blockchain network and focuses on solving the most pressing issues faced by first- and second-generation blockchain projects: scalability, interoperability, and sustainability. ADA, which runs on the Cardano network, is one of the most technologically exciting cryptocurrencies to date. Its proof-of-stake system means it can operate more efficiently than the standard proof-of-work system, and its use of smart contracts means that it can keep track of transactions like Bitcoin while handling payments like Ethereum. In short, it's a third-generation coin that improves on its predecessors. ADA, or Cardano, still has plenty of work to do in the year ahead. After all, having a superior technological product means nothing if people won't adopt it. But 3 key areas make it a top cryptocurrency for 2021. First, ADA has momentum. The currency took just 3 years to hit a $10 billion market cap, 1/3 the time it took Bitcoin to do the same. Second, it sits at just around $1 per coin, making it a tempting target for punters to run up. Finally, it has the ability to handle transactions and smart contracts. This makes it a natural enhancement for other cryptocurrencies like Bitcoin. Number 4. Chainlink. Chainlink, or Link, is an Ethereum token that powers the Chainlink decentralized Oracle network. This network allows smart contracts on Ethereum to securely connect to external data sources, APIs, and payment systems. Chainlink entered the market in 2014 under the name smartcontract.com. Shortly after its launch, the name changed to Chainlink to better represent its core market. Chainlink set up a strategic partnership with Google in 2019. The agreement secured Chainlink's protocol within the Google smart contract strategy. This move was seen as a major win by investors, as it allows users to connect to Google's 2 most popular cloud services. Among many other use cases, Chainlink is currently being used to help farmers hedge against bad weather. The smart contracts filtered through Chainlink pay out insurance claims if values in contract like temperature or rainfall do not meet a certain standard. Payments are instant because they can be deployed as soon as the program receives the appropriate weather data. Chainlink is closely tied to the optimized deployment of Ethereum smart contracts, a concept that's growing in popularity. Chainlink is as different as they come. Rather than operate its own blockchain, Chainlink runs smart contracts on other blockchains. That makes Link an anomaly in the cryptocurrency world, a coin that's relatively agnostic to whichever blockchain it's working on. It's a formula that sounds good in theory. From an investor standpoint, however, Chainlink's complexity has worked against it. Making use of the protocol still requires hardcore programming knowledge, and that shrinks its potential audience. What Chainlink needs is a strong sponsor, a business like Ripple Labs, for example, to market and implement its smart contracts as required. If the currency can find that sponsor, Link will soar. Otherwise, investors can expect the currency to stall in 2021 as newer smart contract coins take over. Number 3. Elrond, EGLD. Elrond is a project that has been getting quite a bit of attention lately. Like many other projects before them, they're focused on scalability. When we say a bit of attention, we mean a more than 5,000% jump in the value of its ERD cryptocurrency in less than 4 months. That was in early 2020, between mid-March and the launch of the Elrond mainnet in July 2020. However, in September 2020, the ERD cryptocurrency underwent a change as it was transitioned to the new EGLD or EGLD cryptocurrency. In addition to becoming the native cryptocurrency of the Elrond blockchain, all ERC20 and BEP2 tokens were swapped. It also saw a redenomination of 1,000 ERD to 1 EGLD, which was in line with the changed economic model that saw the total supply of the cryptocurrency drop from 20 billion for ERD to 20 million for EGLD. The Elrond network is a public blockchain created to provide high-level scalability, interoperability, and high throughput. The goal is to create a decentralized network that can provide the same or better performance when compared with centralized networks, while also providing users with greater privacy. With the unique adaptive state charting and secure proof of stake, the project promises speed and scalability that hasn't been seen for many projects. And the inclusion of support for multiple smart contract languages can only help as Elrond moves into the decentralized application space. It's an ambitious project to be sure, and we'll have to wait to see how rapidly the team is able to continue developing and deploying solutions to determine the potential longevity of the project. While the project looks excellent on paper, it will need to remain nimble and agile to remain ahead of the competition. Number 2. Synthetix, SNX. Synthetix is a software that allows users to mint new crypto assets that mimic both real-world assets like the US dollar and crypto assets like Bitcoin. One of an emerging number of decentralized finance cryptocurrencies, Synthetix enables this service through code alone without the need for a financial intermediary. Rather, Synthetix is simply a collection of smart contracts running them on the Ethereum blockchain. This means Synthetix users do not need to trust a particular institution or person to manage the crypto assets they create. They need to only trust that its code will execute as written. Synthetix is able to generate these new assets using a process called collateralization. To collateralize an asset on Synthetix, users must purchase its SNX cryptocurrency, which once locked in a special contract can be used to generate these new assets called synths. For example, one synth designed to mimic the value of the US dollar is called SUSD. Another synth, which mimics the Bitcoin price, is called SBTC. Still, synths can be created for any asset, be it a commodity like gold or silver, or a flat currency like the euro or Korean won. Synths are then able to track the value of other assets using special data feeds called oracles, which enable users to gain exposure to gains or losses in those markets. Synthetix is blazing a trail in the domain of synthetic assets based on blockchain technology. The SNX token has strong fundamentals, and the protocol itself enjoys a first-mover advantage over newer entrants. However, the presence of up-and-coming competition means that the team at Synthetix will have to continue innovating if they want to maintain an edge. Number 1. APY.finance, or APY. APY.finance is a smart contract protocol that functions like a robo-advisor for yield farming. It offers a single place for users to deposit their tokens, and the protocol will then do all the work in pooling liquidity from other users, rebalancing the portfolio, and distributing gas costs evenly. In short, APY.finance makes it cheaper for users to participate in yield farming. The APY token is APY.finance's native governance token. As the platform is developed further, APY tokens will be used to shape the direction of its future. APY tokens will be developed in 3 stages. Stage 1. Token holders can vote to change the system parameters, such as fees and rebalance thresholds. Stage 2. Token holders can vote to change the parameters of the strategies, such as locking periods and collateralization ratios. Stage 3. Token holders can vote for new strategies to be implemented for the portfolio. So, how does APY.finance work? Users will first deposit stablecoins such as DAI, USDC, or USDT into the API liquidity pool. Upon depositing their stablecoins, users will be given an amount of APT tokens proportional to their share of the pool. Users can withdraw their funds and yield farming profits at any time by redeeming their APT tokens. After a deposit is made, APY.finance will automatically direct the funds to yield farming strategies. The platform's smart routing system redirects the funds not just solely with the intention of capitalizing on the highest yield, but also based on the risks involved. Capital is distributed based on a strategy's risk score, represented by a number between 0 and 10 to the power of 18. A strategy's initial risk score is set when the strategy contract is deployed. The risk is assessed by the team based on a variety of factors. Besides that, you can obtain APY tokens by purchasing them from decentralized exchanges, such as Balancer or Uniswap. You can also find APY trading on other various centralized and decentralized cryptocurrency exchanges. Among the 5, which do you prefer the most? Let us know down below in the comments. And hey, if you enjoyed the video, don't forget to like and subscribe to our channel for more of our engaging content. Thanks for watching, and we'll see you in the next video.